Hello traders, welcome to another daily analysis. Today is December 6th. Right now it's just 5 minutes past 7 Eastern Standard Time. So let's get into it. Yesterday we had the Australian cash rate and statement coming out from Reserve Bank of Australia. And it was actually as expected it's a hold decision, so the rate was not changed. The statement also didn't provide too much hints or the direction for RBA. So basically, for Australian dollar right now, it's still quite neutral fundamentally to a little bit bullish in comparison with other currency. So it's largely sentiment driven, depending on what happened to the commodity market, also what happened to the Chinese economy. London session was relatively quiet. We had a huge volatility Monday after the Italian referendum. So, it's no surprise after Tuesday, things sort of quiet down. So there was no tier 1 data. And the New York session, we had a GDP price from New Zealand, which also quite positive, was in line. Not a surprise, but it was good for New Zealand dollar. And in about 20 minutes, we are going to have the GDP data from Australia. So that's also going to provide a more direction into the Australian dollar. Sentimentally, all equity market was still once again closing green. So that's again another risk on sentiment day. And as mentioned, we are approaching into the holiday season right now. The end of the year, December, you have Christmas, you have New Year's. It's really quite upbeat for the retail market and for the market in general. You are going to have a Christmas rally. So things like that are going to support the financial market, which also provide a lot of risk on sentiment, which also going to help US dollar, also going to help Australian dollar and New Zealand dollar. WTI closed indecisive, actually the first down day since the OPEC deal. And the reason is, of course, like I said, there's no further action after the OPEC agreement. So now people were already skeptic about this deal. And now if you don't show any action, people are more worried. And not only that, they have survey of energy professionals, and only less than 8% of them think that OPEC will actually achieve the target of oil curve in full. So that means if they say they're going to cut into certain million of barrel per day or per month, they are not going to meet that target at all. They are probably going to meet half. Right? That was a wide expectation that they are only going to meet 50% of that target. Also, we have news stated that OPEC and Russia actually report to have the record high oil output last month. So, again, like I keep mentioning, all this kind of oil curve is really artificially trying to control the supply. So that's really, there's a certain degree of limitation of exactly how much you can do to control the market. That's the first thing. Second thing is that unlike 1970, right now the oil market is not controlled by OPEC anymore because of the new technology. Now the oil producer, such as the shale technology, now US can produce as much oil as they want. So does Canada. So OPEC does not have that much impact anymore. So that's why you have to always question all these things in mind, exactly how much they can do for the oil market. So the general direction is that if you have a good news, it's going to go up slowly. But as soon as you have a negative news, it's going to drop. So, the velocity is favored in the downside. So if we have a negative news from OPEC or oil market in general, it's going to drop very, very fast. On the contrary, if you have a good news, it's going to climb up slowly and slowly. So for our 8 major currency, right now for Euro, the market is actually waiting for the ECB meeting on Thursday. So it's quite quiet right now, but the general tone is bearish. And the bearish for a certain reason. First is that they think the bond buying program will most likely to be continued. That's going to weaken the euro dollar. And second thing is that the Italian referendum, of course, play a little bit unstableness into the geopolitics of Eurozone. So those are the negative reasons for euro dollar. And the only positive momentum we might have is that if on Thursday the bond buying program is not going to be extended as long as expected, and that means they're going to taper the bond buying very soon. So that's all the positive signal that we can expect to support euro. But if we don't see that, then euro is still a midterm to long-term bearish currency. For British pound, again, everything is indecisive, depending on the High Court ruling. Now, again, UK government once again came out today saying that they want the parliament to respect the Brexit timetable. It seems that they are really holding a quite strong stance for Brexit, that they really want this thing to happen and want it to happen by March 2017. On the contrary, the parliament, or in general, a lot of British wants to sort of drag on it, because as long as they don't trigger the Article 50, then the Brexit technically is not happening. Technically they are still part of euro, so they're trying to just maintain the status quo right now. That's what the parliament wants to do. I understand that's the politician. Nobody want to jeopardize their career, but the UK government it's sort of in the opposite stance with the parliament, and that's why this High Court ruling is important, because if the court rules in favor for parliament, then we're going to have a more soft Brexit. Then that's also going to be more positive for the British pound. If the court ruling in favor of the government, then you're going to have a hard Brexit, which is going to be more negative for British pound. So really, that's really the sort of main driving factor for British pound. Fundamentally, they are actually doing well. So right now, every investor or all the big money is really looking ahead to see exactly what's going to happen. And that's why right now, if you are a short-term trader, you can still trade them, because right now I'll say it's more neutral to bullish. So if you're a short-term trader, you can always trade buying British pound versus Japanese yen or Swiss franc, or even euro dollar in the intraday trade. But I myself refrain from buying it in a daily trade, because especially this week, because the High Court ruling might come out any minute, and that's going to cause a lot of volatility. But after the High Court ruling come out this week, then I will have a better direction. If the ruling is in favor for the parliament, then British pound is definitely a good buy versus Japanese yen and Swiss franc and euro dollar. If the court ruling is actually in favor of government, then it's a good sale. For Canadian dollar, tomorrow we will have the BOC meeting. The rate is expected to be hold, and really right now the BOC has already came out say many times that they are going to wait and see. So nobody expect them to do anything until 2018 actually. So, and also the government came out always, governor of BOC actually always come out with the word uncertainty. So they really don't know the future. Economic wise, it's not doing well, but it's not worse either. So it's sort of neutral. It's really a neutral stance. I really don't have any direction for Bank of Canada or for Canadian dollar in general. Because of that, they will most likely really be correlated with oil market at this moment. So they're really going to go with whatever happened to the oil at this moment. So if you want to trade Canadian dollar, then take a look at what happened to the oil market. And most likely it will be highly correlated. But don't do anything until tomorrow. Of course, wait after the BOC meeting, wait after the statement, you can read through, see if they have any sort of hint for a future direction. If not, then it will be a neutral currency that go along with the oil market. For US dollar, continues to be strong fundamentally. Sentimentally, of course, you'll see some weakening into it, but like I said, it's just a price action retrace. There is really no other currency can top off the US dollar at this moment. Now, of course, you have to see when you're doing the analysis, you have different time frame. If you're looking at a sort of a general term, sort of mid-term, long-term, sort of 3 months, 6 months to a year, really there's no other currency can top off US dollar. Yes, in the short term, Federal Reserve going to make a decision of the rate hike, and the market a little bit nervous right now because the rate hike is highly anticipated, but we have several Fed members actually came out criticize the fiscal policy by the new president, Donald Trump. Now, that's very rare because usually the Federal Reserve wants to be neutral with the policy. They don't want to interfere with the politics. But they came out already cautious the market that maybe the fiscal policy is too boosted for the economy. That's gonna cause too much inflation. Then they might have to actually tighten rate and raise rate further, things like that. So, but regardless of what's gonna happen next week, for the next 2 weeks for the Federal Reserve, the US dollar, you have to look at the global market, is still going to be the best currency. Look at what happened to the emerging market right now. You have a new bond issuing from Latin America in the denomination of US dollar. Chinese yuan is largely depreciated, and now they're trying to cap off the capital outflow because nobody wants to hold Chinese yuan anymore. They want to buy US dollar. So that's what happened right now, is that investors, pension fund, people are panicking, and really the only clear direction and clear buy is the US dollar. It might not necessarily be the US government, but the US dollar as a currency is quite clear to be a strong denominator for 2017. And that's why it happened that they have this very strong fundamental support. Unlike Euro, even though you see some huge buying power on Monday, Euro is really bearish because of the future. So that's the analysis you do when you look at the long term. So what's going to happen next year? So next year, so of course, some currency you don't know, and that's completely fine because you're not going to know anything about every currency. For example, let's say Canadian dollar, I don't know what's going to happen. Canadian dollar, British pound, I don't know. But for US dollar and Euro dollar, it's quite clear because in a very geopolitical, fundamentally speaking, they have a very strength into US dollar and weakness into Euro dollar. Same as Japanese yen. The Japanese yen currency has been down recently, but the economy actually picked up, and you actually have a lot of confidence from the producers in Japan. And there's no surprise because they want to see their currency keep dropping to help the export business. So in Japan, it's the paradox. If they want the economy to go well, they have to sacrifice their currency. If they sacrifice their currency, they will have a deflationary market. So they basically sacrifice the domestic people. And that's, of course, the paradox, where the paradox is that you have to help the exporter on the price of sacrificing the importer and also sacrificing the domestic earners. But if you know the culture of Japan in general, is that they don't really. It's a very interesting country. I've been there many times myself, but it's a very interesting country. So basically, it's a very endurance country. You don't see much protest or fighting against the government or like a freedom spirit like US. They're very disciplined. They're very group oriented. So what I'm trying to say is that their policy is very straightforward. If the government says we're going to do A, then most likely people will suck it up to do A, even if they are a democratic country. But that's what happened. That's why you don't see too much complaint. You have to think about for all the domestic workers working in Japan, seeing their salary, seeing their saving keep losing value, seeing the property keep losing value, does not make them to want to riot or against the government. On the contrary, they just want to mind their daily business. So that's why the policy can really last for a very long time with very little barrier. And right now, since the government is intended to depreciate the currency and buying the easing program, helping export, so that's the fundamental criteria. So the Japanese yen is still going to be a currency to sell. The only thing you need to watch out, of course, is in any sort of big events in the world, you're going to have a safe haven effect. They are going to be hugely bold. But if you look at Euro Yen yesterday, interesting thing is that nowadays the safe haven effect does not last that long anymore. Back then, when you have one terrorist attack, you're gonna see huge money into Japanese yen. If you have any tsunami, any earthquake in anywhere in the world, so what happened is that nowadays, sadly speaking, people are getting numb about the global events. We are not that emotionally effective anymore. Remember the first time you heard this ISIS group, you heard this terrorist attack, people was so emotional, the media was so sensational, and nowadays it's just people treat it like nothing. Nobody really care about Syria anymore, unless you are a trader looking at global news. Nobody really pay much attention anymore, and that's a sad thing. But that also means that people are getting numb, and that's also decrease the safe haven effect. So Italian referendum was a great example. Supposed to be a big event, but within less than 10 hours, you see things completely reverse. So this huge up and down, it was 400 to 500 pips in euro yen. It's a great example. Swiss franc, it's another story, similar story of Japanese yen. They're going to help the export. They're going to deliberately depreciate the currency. So again, it's a sale for us as long as their policy is in check. For Australian dollar and New Zealand dollar, they both are right now sentiment driven. Really depend on the risk on sentiment, depend on the financial market. They both are good buy against Japanese yen, Swiss franc, and also euro dollar. Of course, for time to time, they are going to lose the stance, but generally speaking, they are quite neutral to bullish in terms of their economics and in terms of their sentiment. So that's pretty much it for now. That's my basic direction. So right now I'm still in favor of US dollar, Australian dollar, New Zealand dollar, and British pound. But again, British pound, I'm more in the intraday position. Like I don't want to get into any long-term perspective until I have a clear ruling or direction from the High Court. Weak currency is still Swiss franc, Japanese yen, and euro dollar. But of course, euro dollar, you have to watch out for different events by events, really depend on direction of ECB. But generally speaking, it's still a weak currency. And all other currency are, for Canadian dollar, depend on the oil market, depend on OPEC. If tomorrow the Bank of Canada has quite neutral stance and you have the crude oil inventory come out tomorrow, if you have a draw, then of course that's going to be positive for CAD. But CAD is in a more similar story as British pound, that I'm not looking to hold anything overnight. It's more like an intraday trading. Okay, so let's take a look at our chart. I don't really have much trade today. I do have few intraday trade, but I just exit everything. Right now I'm flat because I don't see anything happening. Everything is really flat at this moment. So I got out of all my position. And also I'm really tasting different technical strategy to trade intraday trade, which is quite interesting. So why I'm doing it, because like I say, right now I'm approaching the market with fundamental and sentimental, but I yet want to combine with technical, which I think will create such a great probability once you have three elements in line. And that's what happened to my daily trade. Once I combine three elements in line, as you see, I'm very selective and picky, but my winning rate is very high. Basically, I haven't had a losing daily trade in these past few months because I only have very few. But that's what happened, and I want to duplicate that in the intraday trading. So right now, my current strategy is really using the PV level, but I don't really like it because doesn't give me a great direction. So I have a new one. Is really just looking at the trend. Use few trend line, use parabolic, then just candlestick, and combine with the risk, combine with the sentiment and fundamental analysis. But we'll see what happens. I'm doing small position tasting right now, and I will keep you updated. Take a look at our daily candle for our 28 pairs. Just give me 1 second. Okay. All right.